Welcome back to Strongman Personal Finance, everybody. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And y'all like my hat? You like my little foo-foo hat? So recently, we all know Corsair stock just got wrecked, absolutely annihilated. So you know what we're going to do? We're going to do some fundamental analysis. Now, I've done no work before this video, but I'm going to show you exactly how I would roughly value Corsair, because it would give me, based on what I'm going to do, a rough indication of what a good buy point would be for the stock. Now, I guarantee you, Jeremy Financial Education has never done something like this because he doesn't know what it means, because he's a moron. Oh, God. What are y'all complaining because I'm going live? I don't know how to film videos on this Mac. Sue me. Call a financial advisor. All right, so I'm going to share my screen here. And we're going to do some fundamental analysis of Corsair. Corsair. All right. Can y'all see my screen good? Excellent. So, number one, we're going to read the quarterly report. Y'all can see my screen? Okay. Corsair Gaming to report Q1 2022 financial results on May 5th. Corsair, a leading global provider and innovator of high-performance gear, and it's also losing revenue pretty rapidly, announced today its preliminary unaudited revenue was approximately $380 million, with preliminary unaudited adjusted EBITDA expected to be about 14 to 15 million for the quarter ended March 31st. Now, when you see a company talk about EBITDA, earnings before interest, taxes, depreciation, and amortization, trust me, it's probably not profitable, okay? I mean, it might be, but when you see something like that, I don't like it, okay? So over the last 2 years, and that's right here, we've had a 23% growth in revenue. However, we are not expecting to show growth over the most recent Q1 2021. So basically their revenue from 2021 to 2022, this most recent quarter, has been flat. Now, it's going to be a little bit tough to kind of predict what the revenue is going to be. I'm going to be nice to Jeremy in this video, and I'm going to say revenue is going to have some kind of positive growth going into the future. So let's do a little bit of analysis. So first we need to figure out the trailing 12-month revenue. So we know the most recent quarter was 380 million. So what we're going to do is we're going to start filling this out. So we're going to have 380. Let's do it this way. 380 plus, I'm going to screw up this Mac so bad. I hate these things. And then you can actually just go look up their last reports and you can add up their revenue. So in December 2021, that quarter, they had 510.62. 510.62. And then in September, they had 391.12 plus 391.12. And then they had 4279. 427.9. Okay. And then we'll multiply that times 10 to the 6th power. Okay, so their trailing 12-month revenue was $1.7 billion. You guys like that math? Oh, yeah. All right. Next, we need to look at the shares outstanding, because if you buy one share of the company, you got to figure out what percentage of the revenues or in the profits you're getting. So I had this really cool thing I found called macro trends. I don't know. I've been using this the last couple of days. It's pretty freaking good. God, they're so freaking loud out there. Jesus Christ. Do they even have the shares outstanding here? Of course they freaking don't. What a pain. Oh my God. Do I have to Google this? Corsair shares outstanding. This is all I do to analyze stocks, at least initially. Okay, we got it on white charts. White charts. Ooh, looks like they're issuing shares here, ladies and gentlemen. So currently their shares outstanding are $95.2 million. So 95 to okay. Now we got Corsair shares outstanding. Oh my God, look guys. It's a buy at 130. Okay, so we know Corsair's revenue has not been growing recently. Okay, it exploded during the pandemic, but now it's starting to flatten out. So you can see here, I mean, look, quarterly revenue it went up pretty massively during the pandemic, and now it's trending down, 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 down. So I could even use a negative revenue growth assumption. However, I'm going to be nice to Jeremy, and we're going to say revenue is going to grow at 3%. Okay. Profit margin. This is key. So now we're down to $65 for fair value. Profit margin. Is Corsair a profitable company? Let's see. Margins. So we can see their gross margin, their operating margin, and their net margin. Now, before the pandemic, looks like actually during the start of the pandemic, their net margin was 2.6. Okay, and then it ratcheted up during the pandemic to a high of 7.7. However, with the pandemic ending, now their margin is starting to decrease again. This is tough. I'm going to say, let's be nice to Jeremy. Let's say 6% bottom line profit. Might be too high. All right, so we got revenue growth of 3. We have profit of 6. And the PE at this position. So this is not a fast growing company. So their PE ratio should not be 20. I would say 5 years from now, their PE could be between 10 and 15. We'll be nice to Jeremy and we'll say 15%. And 15. And share dilution would be, hold on a minute, what just happened there? Maybe I'm seeing things. I may need to check this. And we have share dilution. So they're probably going to be issuing shares. I'm going to say 2%. Okay. So to get a 15% return with 3% revenue growth, 6% profit margin, and these are being nice, and a PE of 15, it's a buy at 12. I don't know. Okay. Now, it could be a buy. Potentially, but you have to assume the revenue is going to keep growing by 3% every freaking year, which I don't know. The revenue could actually be declining year over year. So I would be really cautious about this stock. So this is kind of one of those stocks. There's really not a lot of data, not a lot of information. It could do well. It could do not. Like, let's say their profit margin goes to 2%. Buy price $4. Am I smoking crack here? Is something wrong? Let's see. Hold on a minute. Let me just get rid of the sheer dilution. Is it just me or is something freaking wrong here? Let's see. Buy price of 5 to get a 15. I think there's something wrong with this, maybe. But, I mean, to be honest, I think Corsair may potentially be a buy right now, but I'm not going to touch it because even if you assume positive revenue growth, it's still iffy. But most likely there's going to have negative revenue growth going over the next couple of years because if you think about it, they had that one beneficial growth and explosion during the pandemic, and then afterwards, it started to climb. So I need to actually check this. I don't know if I'm smoking crack and seeing this wrong, but I think there might be a slight issue with this, which I think it's fine, but I'll have to double check it. All right, so that's that. Let's close this, see if they have any questions. Dun, 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 dun. Love the hat. Thank you, bro. Dun, 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 dun. Do Tesla next. I'm not doing Tesla. I mean, because the problem with Tesla is I don't know where the revenue is going to go. I have no idea. But I can tell you it doesn't make sense for that company to keep growing at 50% every single year. So we'll see. How have I never heard of this Stoink? You must have heard this stock, okay? Tesla or Corsair. I doubt that revenue of 1.7 billion is right, but I don't know. But that's trailing 12 months. Yeah, they had an explosion. I mean, you can go and add it yourself. They just had 370 million, and you go back and add the other 3 quarters. It adds up to 1.7 billion. That's going to be trending down, I think, but we'll see. Corsair price is 16. Your buy price is $6. Yeah, there might be an issue with the PE there. I need to double check that. But I still don't think it's a buy because the big risk is that if you're assuming positive revenue growth in your model and then the revenue growth is negative, you're going to be selling your butt. Okay. And the company could also become unprofitable going into the future. What really scares me is during their pre-earnings release, they said, "Oh, look, we have EBITDA of this." When a company says EBITDA and they don't actually mention profit margin based on GAAP, it's probably unprofitable. Okay. Oh, the revenue was right. Yeah, it was. Just go add it up. I mean, and I use the earnings they just came out with. I don't know what their profit margin was, but they gave earnings or the revenue. So I know what their revenue was, and then going back to 3 quarters, you add it up. How do you factor in SPAC insiders dumping on SPACs, such as Honest, Tattooed Chef? How do you factor in? I mean, it's all freaking scam. The whole SPAC thing, I'd stay away from that. SoFi has potential, but it's very risky, and they're diluting the shareholders. Yeah. Thanks for all you do, bud. Thank you. I know. See, wasn't that hard, ladies and gentlemen? I literally built that at work. I'm not saying it's the most perfect model. Maybe there's an error. I think it's good. But actually, yeah, I think the model is good because you're saying a buy point of $4 is what would give you a 15% return. And the more that you pay for the stock, the less return you're going to get. So the model is actually correct. So let's go back and let's look at it one more time. And we'll be super generous to Lufufu. And we'll say revenue growth will grow with the gaming industry. And we'll say profit margin is 6. And we'll say PE is 30. Okay, then maybe it's a buy. But Jesus Christ. I don't believe these assumptions. It's all about what you put into it. I'd rather be super conservative. And all I do is I look at historical trends. It's like, okay, I see, their profit was this, and roughly the average is this, and the revenue's growing at this rate. Maybe I'll decrease the revenue growth rate going into the future a little bit. And the PE at disposition is kind of a guess, but you want to be lower because the higher your PE, the higher the freaking buy point, or the more of a return the stock is going to give you. So I'd be really careful with that. But yeah, that's it. I don't think it's an amazing stock. And I think it's going to be losing revenue. And it's probably going to be unprofitable in this most recent quarter because they mentioned EBITDA, which that's scary. Chris, we are not going into a bear market. I hope we do. I want to see wreckage. Anyway, that's it. Like, subscribe, tell your friends about me. I would stay away from Corsair. I mean, it might go up, but that doesn't mean it's a great stock. And y'all have a wonderful day. Cheers.